Hi guys, in this video I'm going to be talking about the Brexit deal and how it's affected the stock markets and how I made £200 day trading a gold ETF. Let's get straight into it. Hi guys, it's Eddie aka the Knock Trader, your friendly neighborhood swing trader, back here with another video. Remember to hit that like button, hit that subscribe button and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter and Instagram at the Knock Trader on all social media platforms, and if you check that description section below you see a link to my mailing list, and also you get a link to my Discord group chat room called Pip Talks that I run with infant investors. Let's talk about the elephant in the room, Brexit. So apparently a Brexit deal has been agreed. I'd say don't hold your breath, but signs look positive based on the news that came out today. There's lots of tweets from Juncker and I think Boris Johnson as well. And it seems that a Brexit deal could be in play. The only thing that's potentially could stop it is the DUP, which is the Irish Fringe Party, may not agree to the stipulations of the deal. I don't want to get into too much politics. Basically, the DUP is a Democratic Unionist Party in Northern Ireland, and then there's this thing called the Irish backstop that they're arguing over. I don't want to get too deep into it, but Brexit deal looks like it could be going ahead, and just the fact that there was positive news in light of an agreement was enough to send the markets up temporarily, and then they came back down again. So I'm gonna quickly show you the DAX, because you know that's the index that I like to trade predominantly. I didn't trade it because I was kind of too scared about what was going to happen. I wasn't sure, I wasn't confident in what was going to happen, so I don't really trade on news anyway. So if you look at it here, the DAX has been kind of flirting with this line at 2690 for some time, and it couldn't break through. But when the news came out about the Brexit deal, it shot up, but then obviously it dissipated, because just like most news, if something shoots up because of the news, but then maybe sentiment changes very quickly, because even though the Brexit deal sounds like it could be going ahead, then all the news came out how the DUP weren't going to back it, etc. So maybe the initial kind of interest and excitement of the fact that the deal might be signed, people kind of came back to reality and realized that it hasn't actually been signed yet. So until it actually gets signed and everything's been pushed through, then it's just speculation. So obviously the news pushed up, and then people's then sentiment kind of dissipated and it came back down again. So moving on, this is the quotes for the week for all the different futures contracts. If you look at the daily chart today, most of the indices have been up. Dow Jones up, S&P 100 up, Nasdaq up, Russell Group up, crude oil up, natural gas up, and gold up. Now gold is what we're going to focus on today, because I actually took a trade based off of gold. I didn't actually trade gold itself, but I traded a gold ETF. If you want to know more about ETFs, I've got a video about ETF. I haven't made it yet, but by the time I've made it, I'll put a link in the top right hand corner and you can watch that video about ETFs. So guys, I made £200 today on the ETF swing trade. Now you must be wondering why well, it was a day trade really, but it was a swing trade. I'll tell you why. So it was an intraday trade. I took the position this morning. I took two positions. I took one position that made me about, I think, £100, and then the second position again that made me like £90. And what I traded was an ETF called NUGT. And I'm in another position again. I've taken the third position now, and hopefully I'll exit at £66. So that will take my profits to 260, hopefully. So what I saw was that, well, before we even get into it, NUGT is a direct daily gold miner bull 3x ETF. So basically, it tracks a certain amount of gold mining companies, and then it times it by 3. So that's what the triple leverage is. So it moves 3 times the motion of gold miner ETFs. And gold miner companies, as we know, the gold mining companies are going to be strongly correlated to the price of gold, because the more gold's worth, the more money they can make. So I saw that gold, basically what I saw was that on the, let's look at this, on the 4-hour chart, if you want to look back on gold, spot gold had been making an ascending channel pattern, and it broken out to the downside, and now it found like a kind of point here where it stopped, and then it looked like it was climbing up again. So to me, this looks like it was potentially going to break out in like a bull flag. So it'll be up, down a little bit, like a little channel down, and then break out again. So when I saw this, I thought, okay, this could be we could potentially capitalize on this, but I wanted to make sure that I was right about this bull flag, and I didn't want to be caught on the wrong side of the trade. So I zoomed in and I plotted these two channel lines, descending channel lines for the flag part, for the bull flag. And then if you go into even a deeper analysis, I went down into like the 15-minute chart, and I saw that, well, let's go to 30-minute chart actually. And I saw that price had hit this point, and then it obviously like kind of found a kind of little support line here, and it was, and in this, on the 30-minute chart, we can see that there was a wedge forming. Now at the time I traded it, it looked like it was creeping up, because what I saw was that it was making higher lows. So while I wasn't sure that it was going to break out to the upside, I had a kind of idea that it potentially could hit this resistance line, and then if it retraced, then I'll probably just exit my position. But if it broke out, then that would be even more profit. So and so what I did was that I could have traded gold, but really I wanted to trade the ETF because I could get more money out of it, because it's a triple leverage ETF. So what I did was that now that I saw that gold had a chance to break out, I went to NUGT. NUGT has been making a descending wedge for some time. So it's been ricocheting up, down, up, down, up, down. Hit this support line, and I knew that this could potentially be a long. So when market opened, I pretty much entered my position straight away. So if you go down to the 1 hour chart, I pretty much entered the long position the minute the market opened. So I was long about here, and I took it up. Now when I zoomed in, I initially thought, if you go down to the 30-minute chart, I initially thought it was going to move like in a channel patch to motion. So it was going to kind of ricochet up and down, and it might take a couple of days, which is why I drew this line in this box. I was expecting it to take about 4 days to get to this point. So that's why I drew all this, but in reality it went even faster than that. So then I went down into the 10-minute chart, and to get a better look of how price was going to move, so what I did was that I entered around here, and then price was climbing, and I was happy with that. And the minute it hit this line, I thought, okay, let me take some profit, because I don't know if it's going to retrace back all the way down to the center point, back down to the channel support. So I didn't want to lose everything I gained. So I took my profits around here, and then I did a Fibonacci retracement. So I went from this point here all the way to the top here, and I did a Fibonacci retracement. And what this showed me was that when it retraced the 50% line, and I thought, okay, so it's respecting Fibonacci. This is great. So I then re-entered another position, and then I don't know, I'm not sure where I exited. Either way, I re-entered another position based on Fibonacci, under the assumption that it would climb up to at least this level, and it's done that now already. So I entered two positions, and I made about £200. Now I don't know if I'm being greedy or if this was going to work out, but now I'm currently in the third position, and the reason why I took this third position, because it could potentially go up to this level, this Fibonacci level, because it's respect to this level, came back to 50%, come up here, and it could potentially, I feel like it could make one more climb to this level, because at the end of the day, I believe that the price is going to stop when it hits the channel resistance, and it hasn't hit the channel resistance yet. I might be being a bit too greedy, seeing as I've already made that 200 quid, but if I see opportunity, I'm going to take it. I'm going to see how it goes. As it stands now, it's kind of selling off. I'm in minus 15, but I've got a pretty tight stop loss, and I don't mind the risk to reward that I'm taking. I'm risking 39 to make 66, so at the end of the day, that's like a 2-to-1 risk to reward ratio, so I'm happy with that. If I'm wrong, I'm wrong, and I lose £30, then my total winnings goes down to about 170. But gotta spend money to make money. Gotta take that risk. So yeah, so that's how I kind of traded this, and it's just, once again, confluence is a great thing. I keep going on about confluence, but it's something I'm keep trying to drill into you guys, because that's how you make really informed trades. I used the Fibonacci to kind of inform myself of what levels I could probably re-enter this trade, because I was being very conservative. I entered and I exited pretty much here. I re-entered around here and then I exited high up as well, so I made 200 quid. I could have potentially taken the whole position, but I wasn't sure about it retracing back, and I wasn't sure how it would react. So I wanted to be cautious about the trade that I took. So anyway, that's me, Any, aka the Not Trader, signing out.